Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today, and as usual, don't forget to like this video and subscribe to my channel. That will be awesome. So in today's presentation, I'm going to do an explanation of what happened in the markets last week and talk a little bit more about my portfolio as a whole. Just before I get started, I just want to ask you if you could please like this video and subscribe to my channel. That will be really awesome. Okay, to get things started, I just wanted to talk to you about one particular thing that happened last week before we get started. So what happened last week was that I made a small trade in 𝘃𝗶𝗴𝗴𝗃. And the problem was with that there was an issue with the eToro risk score when it was attached and related to the 𝘃𝗶𝗴𝗴𝗃 instrument. And I think it'd been assigned a much higher risk. And I think that there was a glitch or bug in the system. I have spoken to eToro and they are looking into this in more detail. And I expect this to be solved within the next couple of days, as they have said that there is a bug within this instrument, which is a newly listed instrument just a couple of weeks ago. So that should be sorted out. So I just want to let you know that I haven't been taking any really large risks. This was a very small position as part of my short-term trade strategies that I do with a very small portion of my funds, and this was no different to any other trade that I made. Had a little bit more leverage, but it was still wasn't too high risk. And yeah, that should be resolved within the next couple of days. So I'm currently copy blocked, but I'm expecting between 1 and 2 days for that to be fully lifted, and you will be able to add funds and operate and copy me as usual. As we move on to what happened last week, and our portfolio actually held up fairly well, at about minus 0.47%. And that's not too bad when we consider the macroeconomic climate that we're in and some of the things that happened last week. If we compare that to how the broader markets did, so if we look at the NASDAQ, that was down about 4.4% last week. And if we look at the S&P 500, that was down about 4%. And Bitcoin was down about 5.38% last week. So I think we held up quite well for a number of different reasons. Obviously, it was a poor week for the US and the European markets. However, some of our Chinese stocks did pretty well last week, such as JD.com, also Alibaba. They performed very well last week as China looks to continue to implement some accommodative fiscal policies and support and stimulus. So the China bounce helped us a lot last week. We also had one of our stocks within our portfolio as well, Microfocus, is subject to a takeover bid from a large Canadian company. And actually that rose over 93% on Friday when the news came out. I think I'm going to plan, this is a long-term position in our portfolio, but I did think that they could be a long-term takeover target because their share price has reduced a lot over the last few months or so. And also the US dollar is obviously a lot stronger than the US pound at the UK pound at the moment. So it makes sense. Acquisitions make a lot more sense at the moment for either US or Canadian kind of companies. Also, I did a lot of short-term trades last week. I did some short-term trades, both long and short, in natural gas and heating oil, as well as Waymob, as well as ASOS, Lenovo, EOS, which was a short position, and Wizz Air. So I'm continuing to do my short-term trades, which help to alleviate some of that volatility that happened in the market. If we look on it as a 2022 against benchmarks, we're currently at about 29.14 for the year. This is obviously not great, and the situation in the macro environment is very poor at the moment, and especially if we also consider what's happening in Bitcoin and crypto. Our portfolio has underperformed some of those key indices. However, I do think that we do have a lot more upside potential than many of those indices, and we also have a lot of diversification as well. If we look at how the Nasdaq is doing, the Nasdaq is down about 22.4% for the year, and the S&P 500 is down about 14.9%. And as I said, and Bitcoin is down about 57.2% as well. So you can see, obviously, there's been a big drawdown in crypto, which I will talk about a little bit in detail later. However, I'm very positive on the future of our portfolio. And I think that we have a very strong strategy. Although we're underperforming the benchmarks at the moment, I believe that we have a good chance of catching up towards the end of the year. And I want to stay very true to my strategy. I'm not going to change my strategy every month as little pieces of news are delivered in the markets. This is not the best way to get long-term results. So thank you very much for your patience with the portfolio. If we also look at the main news for last week and we go through what happened in the markets, I think the majority of the losses in the market last week came on Friday. This is because Jerome Powell delivered a hawkish speech after the annual Jackson Hole meeting, which happens once a year. Basically, what he said was that they had to continue to increase interest rates over the year, and that they couldn't really rest on their laurels and start to reduce those interest rate hikes until they were very sure that inflation had been quelled and that inflation had got down close to their target. So obviously this caused a panic in the markets, and people think that they're going to continue to increase those rates as high as possible for this year. However, it is expected and it is unlikely that they will surpass 4% interest rates by the end of the year. They were talking about kind of 2.5 or 3%, which is kind of a market neutral stance. However, it is expected that they probably will go beyond that in order to tackle inflation, and that they won't just pivot as soon as inflation peaks. So I'm expecting it to take some time before they stop to slow down or reduce those interest rate hikes. However, I do think that they will get to a point where they are comfortable, or there's a slightly deeper recession than they expected, and then they will have to U-turn on policy rates. But I do think it's a little bit far off. We also had the PMI data, which was released, and it's actually moved into contraction territory. So just for you that are unfamiliar with PMI, if it goes below 50, then it usually moves into contraction territory. So this shows that, for example, manufacturing, service industry, etc., has been affected in the US. Also saw that unemployment was lower. And also we saw data which said that the sales of new homes in July fell to the slowest pace since 2016. And one of the key major pieces of news in the market last week, again, was to do with natural gas prices. And they have continued to surge, and we are really standing at very high levels, near record levels of natural gas prices. And they continued to increase again last week as there was more closures and expected maintenance of the Nord Stream pipeline, which is a pipeline that connects Russia and Europe. And that's expected at the end of August of what's already a very tight natural gas market. So that affected the prices. We also saw the European Central Bank July policy meeting. And again, in that meeting, very similar to the US, is that they were expecting continued interest rate hikes, and they could continue to soften high inflation. Actually, the European Central Bank is actually quite far behind the US in terms of being able to tackle inflation because of that energy dependence that I mentioned earlier around Russia and some other things as well. And it's expected that they're not going to hit peak inflation until way after the US. Again, on the PMI in Europe, that fell to an 18-month low of 49.2. Again, contraction territory, and really manufacturing has really taken a big hit. In the UK, business activity has continued to slow, and there's been quite a sharp fall in the manufacturing sector. That's expected to continue for a little while, and as prices continue to spike overall, there's going to be less money in people's wallets and less spending, and obviously inflation is very high as well in the UK, so it's very important to watch some of those data points. And lastly, China has outlined a policy package. They're adding over 300 billion Chinese yuan, which they plan to use for kind of infrastructure projects, which should help to stimulate the economy overall in China. We have seen over the last couple of months them continue to put in different stimulus packages, which will help out the economy as a whole in China. As we move on to the top 3 performing stocks of last week, and the top performing stock of last week was Microfocus, and I mentioned that at the top of this video. It rose very high on Friday, and that is because of takeover talks with a Canadian firm in order to acquire Microfocus, and it actually shot up over 90-something% on Friday, and overall for the week last week it was up about 85.44. It's bank holiday Monday in the UK today, but I'm expecting probably to close that tomorrow because I don't see too much of an upside, and sometimes these things take a while to go through and they're always at a risk of stalling or them not coming to an agreement. So I think I'd prefer to close that position and then use it in profit to use it to have additional positions in the future. Everbridge as well was also the second best performing stock in our portfolio last week, and that was up about 26.36. That is because there are a lot of rumors in the market that Everbridge are also trying to ready themselves for a potential sell. And there are quite a few inquiries and inquirers about Everbridge and the potential to have an acquisition. Nothing firm is in place, but again, that has really suffered over the last 6 months to 1 year and becomes really a prime acquisition target. The third best performing stock for last week was JD.com, and they were up about 14.71%. Chinese companies did quite well last week, again, because of those policies that have been put in place by the Chinese government to support business. So if we continue on with my Death by Charts series, I just wanted to outline 2 charts here. The chart to the left looks at the US retail sales. And if we look at that on both a nominal and an inflation adjusted level, we clearly saw that on an inflation adjusted level that we saw a peak in terms of the US retail sales in April 2021, and that is starting to taper off slightly. Obviously, inflation's very high. Obviously, it would increase the amount of retail sales as prices continue to rise, but I guess the figure that actually matters is the inflation adjusted level, because that shows really the demand for products and services. So that's kind of tapered off a little bit since the April peak. If we look at the chart on the right and we look at e-commerce sales, again, minus inflation, we'll see that that red line there towards the bottom. In 2008, 2009, it went just below that kind of red line. And now again, we are starting to go below that red line. So it could be a sign that we could have potentially bottomed in terms of e-commerce retail sales, and we could go higher, but that process may take a little bit of time. If we also look at the chart as well to the left hand side, what you will see is the UK CPI year on year. And then we also see in the dark navy line, we see the Bank of England rates. As you can see, the CPI has really risen really high recently, again, mostly to do with commodity prices and food prices, etc. And we can see that we're just really in the early innings of increasing, Bank of England increasing their rates at just 1.75 so far, and they're doing it gradually. So I still think there's quite a long way to go in terms of that UK CPI coming down and that Bank of England rate going up. Another chart I just wanted to bring to your attention, to the right was the emerging markets compared with the S&P 500. And I thought that this was just pretty interesting to show, because it shows some clear periods in time where from 1987 to about 1994, we saw the emerging markets really outperforming the US. And then there was a period between 1995 to 1998 where the US were outperforming it. And then from 1999 to 2010, you had the emerging markets outperforming the US. And now for the last, from 2011 to 2022, so just over 11 years, we've seen the US outperforming the emerging markets. So it's something to keep an eye on. You can see that there's kind of clear cycles with the emerging markets outperforming at certain periods and the US outperforming at certain periods. But usually that kind of goes on a lot longer than expected. I do expect that we're going to have a surge at some point from the emerging markets, and they've been suffering quite badly. A lot of that is because China takes up a lot of that market, and obviously they've struggled as of recently. However, I think it's very good to keep some emerging market stocks in your portfolio for some diversification. So if we talk about crypto now, and we go through crypto news and views, it's been a very tough year, as you know, for Bitcoin. Bitcoin last week slumped below the 20K mark. And that is mainly because we are in a risk-off type of environment. The news last week didn't help at all about what Jerome Powell said at the meeting, that they were going to continue to increase those interest rates. We're also seeing an extremely strong US dollar as well, as people move into the US dollar as kind of a flight to safety and sitting on kind of piles of cash. And that all kind of adds to this kind of risk-off environment. So what might happen in the future? So I was of the belief that we had probably hit the bottom when we had all those news of like Celsius going under, the Three Arrows Capital fund as well. And obviously the Luna UST debacle. However, obviously we may be faced with an extended period of kind of a risk-off environment, and it is possible that we might see a potential double bottom or getting quite close. I think we're just under the $20,000 mark at the moment. It could potentially go down to the kind of 17,500 mark, possibly. But I still am of the belief at the moment, if I look at lots of on-chain metrics, etc., that we could have already bottomed. And if not, we might be in for a potential double bottom. But I don't expect it to either go below that dramatically or have any sharp drop downwards. Another piece of news is the SEC has again delayed the decision on Van Eck's latest spot Bitcoin ETF, and they've delayed that by another 45 days. This is not unexpected. I've talked a lot about in the past about spot ETFs. It's not something that the SEC are in support of really at the moment. There's been many that have been already rejected, and I expect that they are just delaying that, and at some point that will be rejected. However, at some point a spot ETF will be approved, but I don't foresee that happening in 2022 anytime. We've also seen a real drop-off in the NFT market, and there was news that OpenSea's volume has really plunged. So OpenSea is one of the largest platforms for NFTs, and that's been suffering as the NFT prices have continued to drop, and the volume plunged by about 70-80% from those highs. We also saw the Alameda CEO step down. He has been the co-CEO of Alameda for the last kind of 6 months or so, and he's been kind of taking a backward step. His official position was that he wanted to spend more time doing the things that he wants to do, and that it's nothing to do with kind of Alameda, but there has been some rumors around about relationships with the co-CEO that they had and some power struggles. So anyway, he has stepped down from his position. And the last one is Avalanche. There was a tweet released by 𝘃𝗶𝗱𝗲𝗄𝐴 in which says that the lawyers on Avalanche, lawyers that work for Avalanche, have been trying to drum up cases and drum up speculation about other protocols in order to get an unfair advantage. I'm not going to go into a huge amount of detail on that. It's worth checking out 𝘃𝗶𝗱𝗲𝗄𝐴 on Twitter to check the full story, and you can actually watch the video of a leaked discussion between the lawyers. If we look at the Bitcoin charts as well, and I wanted to look at some of the on-chain metrics, and if we look at stable coin dominance, I thought that this was pretty interesting because what you can see here is you can see some clear peaks here in terms of this green line here. You see some clear peaks of where stable coin dominance becomes really high. So we obviously had that stable coin dominance close to when we hit the lows back a month or two ago, and then that kind of dropped off. And what I'm expecting here is this stable coin dominance to kind of increase again and go kind of up to this line, and that could be a kind of a double bottom scenario where it could be a good buying trigger to potentially buy more Bitcoin or some other cryptocurrencies. So stable coins is quite good to watch because this is basically dry powder which people have on the sides, and then that increases, and then when the prices get to a very attractive level, they then use those stable coins. And this is what I was talking about in terms of the a double bottom. So if we look at kind of a textbook bear market correction, what you often see is a bottom. So if we look at crypto just in general, what we had there is we had that kind of bottom like around a month or two ago, around 17,000, and then you have this kind of slight bounce back as optimism rises, and you often need to retest that kind of double bottom before you kind of move upwards again. So again, I wouldn't be surprised if we did get close to kind of a double bottom, and it will be very interesting again to see around this point, around the 17,500 point, whether there again, like there was last time, there'll be a lot of buyers to come in to kind of buy the bottom, and then we see more buyers coming to the market. So that's pretty interesting. Okay, so thanks very much again for listening to my video today. Again, don't forget to join my Discord group. Come and join us. We have some really awesome discussions, great group of people. So would love to see you in that group if you're not already, and you can ask me any questions in there that you want. Thanks very much for listening to my video today, and enjoy the week ahead.